Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's now time for the Skechers earnings. Very, very exciting. We're about to go live for the Skechers earnings. Stock is up, but they've missed on earnings. I'm guessing they've done better on guidance, which you'll see in a moment. But we've got just over 15 minutes to go before the earnings call begins. So if it's your very first time, consider subscribing. This will go out as its own video later. Tap the like button as well. That would be wonderful if you'd like to do that. But yes, we are all set for the Skechers earnings. So what I'm going to do is I'm going to put this on our social media. I've not had a chance to do it yet. Flat out every single moment of the day. It's all a matter of just going as fast as possible. SKX is the ticker. Live now on YouTube. There we go. I shall put the link let me just get that. We've got a few minutes before it starts, so don't worry, you won't miss anything. Let me just drop in that there, and we want the ticker. I'll just show you. Oh, no, there's no point showing you what I'm doing. You want to watch the chart, right? SKX, Skechers, Martyn Lucas Investor. There you go. Let's add the image, just a second. SKX earnings, there it is. Post that. Okay, I'm going to tag in Skechers on this one. I've got a relationship with Skechers. 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 Which one should I do? That'll do. Okay, we've done that. I'll keep an eye on it a second. I'm just going to put that on our Facebook as well. If you want to follow me on Facebook, I'll give you all these links. There's Facebook. We've got a page, and we've got a group, Skechers. All the links are below if you want any of those things. Okay. Here is my X account if you want to vote on whether it's a good stock or not. There you go. Okay, there it is. It's just now on Facebook, promoted. Everybody on TikTok has just joined me. How are you all doing? Good to have you here. If you want to be part of the main show, click on the profile link up here. You can come out of the main show and you can see my link to YouTube. That's the main screen here. If you want to watch it in 4K and surround sound, and you want to see all the charts, and you want to speak to all the traders and all the investors, the link is just up here in YouTube. If you do come into YouTube, just say, I'm from TikTok, and you'll get a special welcome in from the family. We've got members in 62 countries and 14 languages, and that's how it works. All right? Okay, I'm just promoting the event. We're just about to start with the earnings. So my live positions, my live trades. Okay, there's taking care of Facebook. We'll put the same thing on our Instagram. Again, all the links are below, all the videos, or on the website, martynlucas.com. Let me put that out there. There's the image. Let me show you what I'm doing so you can see exactly what I'm doing. I'm just posting onto Instagram. I do it like this. Put the tag in there, and I've got a relationship with Skechers here as well. So there we go. Tag that in there. There you go. And lastly, I will do my threads, and I shall post that there. And yes, I often get asked why I do this. I always like my own posts. Why not? I'm always a bit of an OCD, really. That's all it is. It doesn't do anything. I just like doing it. So at least every post has got a like on it. Right, back to Skechers. There we go. And we're all waiting for the call. So here is the chart that we're looking at. Here is the advanced chart as well. We look at the price. It's massively up. They've missed on earnings, but they must have a good guidance to be like this, or it could just dump. That's the way it goes. That could happen as well. The Skechers event There you go. There it is. There's no visuals, just audio. Just a few moments to go. So let me just come back to my audience. I'm from Portugal. Louis Rosa has just come over from TikTok. Okay, let me put you on the screen just for a moment. Let me give you a welcome in. Can everybody welcome our guest from TikTok who's just come over? Let me just do this a second. Bloody hell, so many things you got to do in it. There we go. There. Let's put you on the screen. There you go. This is you on TikTok. This is hi from Portugal. I normally follow you in TikTok. That's very, very nice. Thank you very much. I want to put a warning out to you, though. Be very, very careful. Those who are watching, you'll see our TikTok guest come on the screen right now. I like to promote everybody, help everybody get more followers and all the rest of it. I love doing that. Be very careful if you are following me on TikTok, not to follow somebody else. There are over 100 copycats of me on TikTok. I've complained about it. They do nothing about it, I'm afraid. They just say it's okay. I don't see how it's okay. I will never message anybody. I will never follow you. I will never engage with you. I'll never send you messages. I'll never sell you anything. All I do is go live 12 hours a day. So be very, very careful if you are, watching videos or following anybody on TikTok. I am the only real one. Okay? Obviously, I'm real. Hello, I'm live, sitting right here, talking to you now. All right, let's go back to the stock. We got 10 minutes to go. We're going to cover the earnings, and lovely to have you here. If you become a subscriber on TikTok, I will do reviews for you. You get the same benefits that you do on YouTube. You don't get the YouTube benefits, but you do get the review. I only follow the real one, Louis Rosa. I'm glad to hear it. I'm glad to hear you only follow the real one. All right, okay. It's lovely. So you're from TikTok. So where are you from in the world? What country? Would all my members, you'll see everyone's got a badge here, Louis Rosa. So can everyone say welcome to Louis Rosa? It's just come over from TikTok. That's cool, isn't it? L-U-I-S. Welcome, Louis. Is it Louis or Louis? What country are you from? And what is your native language? I'd like to speak to you in your native language. All right. Could everybody please do that for Louis? I'm going to go with Louis. I hope I got that right. Skechers, just a few moments to go now. We've got 9 minutes to go before the earnings call. If you've just tuned in, click subscribe, ring the bell. And there is only one Martyn Lucas. Yeah, there is only one. Not on TikTok, there's not. There's hundreds, all pretending to be me. Vaz, welcome, Louis. Where are you from? What country? You're getting welcomes now from our members around the world. And we'd love to be able to welcome you in. Right. Let's have a look. Did anyone do a boost on Discord? Let's have a look. Did someone do a boost? Level. Hang on. Oh, no one did. I was thinking, oh my God, it's gone up already. Simon Meadows. If Simon Meadows is here, I'm from Portugal, from the city of Setúbal. Wonderful. We've got a guest here from Portugal. We actually fly the flag. Do we have a member in Portugal? Let's fly the flags. We've got 8 minutes to go before the call starts. Have we got a member in Portugal? Could someone remind me? I'm looking down the list. Portugal. Have we got a member in Portugal? Yes, we do. One of our first, actually. We do have. Here comes the Portuguese flag. You'll see it straight away. We had a guest join us from Portugal right at the beginning. Very, very soon. There you go. There's Portugal right there. All right, there's Portugal. We had a member join us from Portugal right at the beginning. Right, so for you, I want to do something. I did say if you come over from TikTok, I will do a special welcome for you. So if anyone on TikTok's listening and you want a special welcome, here it comes. Louis, you should speak like Louis. Okay, Louis, I've got it. So we've got 7 minutes to go. So this is for you. All right, are you ready? I'm presuming Portuguese would be your first language. So I'm going to do this for you. So, welcome, Louis, to the family. It's lovely to have you here. You are our second guest from Portugal. I visited Portugal several times. It's a wonderful country. Thank you very much for joining us. We're live 12 hours a day, and we're here to help people. We do the stocks and shares, and then every Friday, I have music in my music channel. I was voted by Sir Elton John as the world piano man. So every Friday we have fun doing that. Welcome to the show. And here is your special welcome as you joined us from TikTok.
Bem-vindo, Luís, à família. É prazer tê-lo aqui. É o nosso segundo convidado de Portugal. Visitei Portugal várias vezes. País maravilhoso. Muito obrigado por se juntar a nós. Estamos ao vivo 12 horas por dia e estamos aqui para ajudar as pessoas que fazemos as ações e todas as sextas-feiras tenho música no meu canal de música. Fui eleito por Elton John como o pianista mundial. Então todas as sextas-feiras nos divertimos a fazer aquelas boas-vindas ao concerto e aqui estão as suas boas-vindas especiais quando se juntou a nós no TikTok.
There you go. That was your special welcome. Thank you very much indeed. If you've got anything that you want help with, support with, I can promote stuff for you. I'm just here basically to help people. I love helping people promote their businesses and stuff like that and just having fun. That's why I do this. Okay, now then, we've got a miss on earnings expected 2095, made 91, but we are going up. Let's see how this goes. Thank you, everyone. Very nice. You're very, very welcome. I hope it was okay. 5 minutes to go. Now, if you've just tuned in, click subscribe, ring the bell, and tap the like button. That would be absolutely great. We would love it if you did it. How is everybody doing on TikTok? We just got a guest join us from TikTok. You click the profile link, you come out of the live, popped on in, the YouTube links at the top, and they got their own welcome in their own language. They were Portuguese, they are Portuguese. So if you do the same thing, if you want to come and say hello, meet the traders. This is my YouTube show, this big screen here, and we trade live 12 hours a day. I've had some success. I'm now up to $102,858. I started with $5,000. You'll see it on the screen in about 10 seconds. So I've done quite well, and I'm here to help and support you and provide service in any way I can. Tommy K, Elisa, Dean Wilder, how you all do? Gene Wilder, I love it. I love it. If you click the little star that appears above my head just there, you can become a subscriber, and then you get exclusive perks and benefits as well. So you might enjoy that. All right. That's not right. That's not my balance. That's just changed. That will refresh in a minute. There's obviously a refreshing issue. If I come back, there you go. There's 77,000. Then it will jump up the 104, 102 as it is now. Just bear that in mind. Let's refresh it again. There it is. There it is. It happens sometimes with the charts refreshing. All right. Let me get back to the main show. We got 3 minutes to go. Let me check the studio a minute. Just bear with me as we go around the back of the studio. Okay. We're all good there. That's all good. Just making sure everything is ready to rock and roll. Normally I invest in ETS, but thinking of putting something in stocks. I am 100% in the S&P 500. The reason I do that is so we can be an open and fair channel. I don't pump and dump stocks. I interview CEOs. We have them on the show. So because of that, I only own the S&P. That's my way. That's the way I do things. And that's what it's all about. I don't invest in individual stocks just so there's complete transparency. My reviews are honest and real. I'm not promoting anything. And because of that, you know exactly what you're getting is real and it's not for my benefit. Oh, look at this. 1400 is giving me lots of likes. Thank you very much. Let's put you on the screen. We've got 2 minutes to go. I've just got time. This is... who's going to be my top liker? I tell you what, if everyone taps the like button with two fingers like that, if we get to What number shall I pick? If we get to 20,000, if we get to 20,000 likes by the end of the show, I will go back here at the end of the studio, at the end of the show, and I will do a song. At the end of the earnings, I will go to my piano and I will do a song. If everybody taps the like on YouTube and everybody taps the like, 20,000 likes, okay? So 2 fingers. If everyone does it for about 5 minutes, we'll be there. So, I'll do a song tonight in the studio behind me. I was voted by Elton John as the world piano man. So if you want to hear that, I'll do one of my own songs for you in the studio back there. And you can hear it live on the show. But we need 20,000 likes. So everyone do that. If anybody wants to help me do that, that will come up at the end of the show. 20,000 shouldn't be very hard to do. It'll take about 5 minutes if everyone does it with 2 fingers really quick. All right, Skechers, 1 minute to go. We had a pump and a dump. They missed on earnings. Everybody bought it, and now they're dumping it. So be very careful if you've just chased it. They missed on earnings. Okay, so, and if you want to help out on that little mission on TikTok, I'll give everybody the link to TikTok. It'll take about 10 people, about 5-10 minutes to do it. If everyone taps, if you go crazy with your fingers, you can do it. Let me give everyone the link. And we've got a minute to go. Here is my Martyn Lucas Investor TikTok channel. Here it is. There you go. There you go. I'll give it to my Rumblers as well. Nice Rumble audience tonight. There you go. Okay. Right, here we go. Skechers. Right, we're playing audio. We're about to begin. Let's see how they do tonight. Going to keep muting the music. We're up to 678. We're starting now. We're starting. If any of you could put in the chat. Here we go.
Well, at this time, all participants are on a listen-only mode. A question and answer session will follow the formal presentation. As a reminder, this conference is being recorded. I would now like to turn the conference over to Skechers. Thank you. You may begin.
Howdy, everyone. Thanks for joining Skechers' second quarter 2024 earnings conference call. My name is Jared Dollerbrook. I'm a senior product manager on the product development team here at Skechers, and I've been with the company since starting as an intern in 2017. My favorite style is the Snoop 1 OG sneaker from our Snoop Dogg collab. Also joining us on the call are Skechers' Chief Operating Officer, David Weinberg, and Chief Financial Officer, John Vandermoor. Before we begin, I would like to remind everyone of the company's safe harbor statement. Certain statements made on today's call contain forward-looking statements based on current expectations, including, without limitation, statements addressing the beliefs, plans, objectives, estimates, and expectations of the company and its future results and certain events. These forward-looking statements involve known and unknown risks, uncertainties, and other factors which may cause actual results to differ materially from such statements. There can be no assurance that the actual future results, performance, or achievements expressed or implied by any of our forward-looking statements will occur. Please refer to the company's reports filed with the SEC, including its annual report on Form 10-K and quarterly reports on Form 10-Q, for more information on these risks and uncertainties that may affect the company's business, financial conditions, cash flows, and results of operations. With that, I would like to turn the call over to Skechers' Chief Operating Officer, David Weinberg.
Good afternoon, and thank you for joining us today on our second quarter 2024 conference call. The second quarter marked another sales record for the period. Sales were $2.16 billion, an increase of 7.2%, or $145 million compared to last year. On a constant currency basis, sales were $2.19 billion, an increase of 8.7%. Gross margins were 54.9%, a 220 basis point increase. We're also pleased to announce a new $1 billion share repurchase plan, which replaces and significantly enhances our existing program. The record second quarter sales are particularly noteworthy given supply chain disruptions impacting shipments to Europe, a difficult and price-driven 618 shopping event in China, and foreign currency headwinds. Strong global demand for our comfort and innovative products drove our record sales, resulting in growth across all regions and segments. The infusion of comfort technologies such as Skechers hands-free slip-ins within our diverse product offering, from the Snoop Dogg collection and Skechers Go Golf to Skechers Go Walk and Kids, resonated with consumers of all ages and interests. We have recently expanded this comfort and convenience feature to additional product categories. Skechers hands-free slip-ins is just one of our many comfort innovations, which also includes Skechers Arch Fit, Skechers Air-Cooled Memory Foam, Hyperburst, and many more, all of which are part of our being the comfort technology company. We have successfully partnered with industry technology leaders like Goodyear to further enhance our product offering. We also announced a new partnership with John Deere. The footwear incorporates the iconic John Deere branding with Skechers comfort technologies, the perfect blend of innovation and rugged style. In our performance category, we collaborated with our elite athletes and product testers to elevate the fit and technologies across the division. No matter where you train or compete, and regardless of your skill level, you can trust that you are equipped with comfort that performs. Recently, athletes competed on global stages wearing Skechers football boots, including Golden Boot winner Harry Kane for England and Alexander Zinchenko for Ukraine, both at the Euros, and Bobby Reed for Jamaica at Copa America. This weekend, we will continue to see athletes competing. They include Skechers ambassador and Philadelphia 76ers star Joel Embiid, as well as Canadian golfer Brooke Henderson, British golfer Matt Fitzpatrick, and Spanish race walker Diego Garcia. American beach volleyball duo Andy Benish and Miles Partain will be playing in Skechers branded uniforms. The Malaysian Olympic team will also be wearing Skechers footwear during the opening ceremony and for daily use during the games. With football rolling out globally this month, our roster of athletes continues to grow, including recently signed West Ham rising star Mohamed Kudus, Bundesliga striker Ragnar Aka, and Chilean defender Emiliano Amor. And with basketball rolling out globally next month, we are announcing the signing of WNBA and Los Angeles Sparks rising star forward Rickea Jackson. We see many more opportunities ahead as we bring Skechers basketball around the world. As the comfort technology company, we prioritize delivering the ultimate in innovation, comfort, and style so that every pair looks and feels exceptional. Whether you're working in an office, restaurant, hospital, or playing golf, basketball, or pickleball, Skechers will be your unwavering companion in comfort. We engage with diverse consumers through a comprehensive, multi-platform, 360-degree marketing approach. In the second quarter, this included the first Skechers football commercial starring Harry Kane, Skechers Uno campaigns with actress Ashley Park, and German singer Vanessa Mai, Skechers apparel campaigns for men and women, and Skechers hands-free slip-ins with global as well as regional talent. This quarter, we introduced a new Skechers football campaign with our team of elite athletes, as well as spots featuring Harry with guest stars Snoop Dogg and retired English footballer Jamie Redknapp. As we did for football, we have created dedicated social channels for Skechers basketball in preparation for the global launch in August, and we are in the process of creating fresh campaigns with Joel and Rickea, as well as new campaigns with New York Knicks Julius Randle and LA Clippers Terrence Mann. As we continue to drive brand awareness and purchase intent and increase our product offering globally, we remain focused on building efficiencies within our business to scale for profitable growth. Looking at our second quarter results, sales increased 7.2% to a new second quarter record of $2.16 billion. On a constant currency basis, sales increased 8.7% to $2.19 billion. Domestic sales increased 7.7%. International sales increased 6.9% and represented 60% of our total sales. By region, Americas increased 7.2%, EMEA 14%, and APAC 2.2%. The quarterly growth came despite several macro headwinds. In the United States, traffic was down, and in China, economic challenges weakened consumer demand across multiple industries, especially over the 6/18 holiday period. In India, we navigated ongoing import regulations, which led to constrained inventory. We believe India is an extremely important market, and we are actively addressing the regulatory hurdles by producing more product locally and leveraging our new 660,000 square foot distribution center near Mumbai. In addition, despite extremely strong demand in Europe, sales were shifted to the second half of the year by increased transit time. This created a short-term imbalance between on-hand inventory, which was down about 40%, and in-transit inventory, which was up over 150%. Our wholesale sales increased 5.5%, driven by domestic growth of 14%, which was the result of double-digit increases in our men's and kids' footwear, as well as growth in women's and improvements in volume and ASPs. International wholesale was flat compared to last year, primarily due to the aforementioned challenges in China and India. Direct-to-consumer increased 9.2%, resulting in sales of more than $1 billion for the quarter, a first for the company. This growth was primarily due to an increase of 15% internationally, with improvements in most markets for both our brick-and-mortar and e-commerce stores. Domestic direct-to-consumer sales improved 1.4%, as we faced a particularly strong comp with growth of 29% in the second quarter of 2023, and the reported softer retail store traffic across the country. Direct-to-consumer continues to be a key segment of our business and an indicator of positive consumer appetite for our brand. We ended the quarter with 5,267 Skechers branded stores worldwide, of which 1,702 are company-owned locations, including 576 in the United States. We opened 71 company-owned stores in the quarter, including 27 in China, 15 big box locations in the United States, 6 in Vietnam, and 5 in Germany. We closed 40 stores in the quarter. Also in the period, 104 third-party stores opened, including 56 in China, 8 in Indonesia, 7 in the Philippines, and 3 in India. This brings our third-party store count at quarter end to 3,565. In the third quarter to date, we have opened 13 company-owned stores, including 3 big box stores in the United States and 3 in Mexico. We expect to open an additional 140 to 150 company-owned stores worldwide over the remainder of 2024. Investments across our direct-to-consumer business, product offering, demand creation, and infrastructure remain priorities, including the expansion of our distribution center in Panama, which serves multiple countries in Latin America and is now operational, and our new company-owned DC in Colombia, which opened this month. We continue to focus on making our products available where consumers want to shop, be it at our retail and e-commerce stores or at one of our many wholesale and franchise partner locations around the world. We're looking forward to the second half of 2024 as we continue to scale our business worldwide and reach our goal of $10 billion in annual sales in 2026. And now, I would like to turn the call over to John for more details on our financial results.
Thank you, David, and good afternoon, everyone. Skechers delivered record second quarter sales of $2.16 billion, growing 7.2% year over year, driven by continued strength in our international direct-to-consumer business and significant improvement in our domestic wholesale business. While strong, these results were below expectations, due in part to severe foreign currency exchange headwinds in the quarter. On a constant currency basis, sales were more in line with our expectations, growing 8.7% to $2.19 billion. Earnings per share in the quarter of 91 cents, 97 cents on a constant currency basis, exceeded our expectations, reflecting continued strong gross margins. Despite navigating these and other headwinds from the supply chain, regulatory obstacles in India, and a lackluster 6/18 holiday in China, we are encouraged by the continued positive response to our comfort technologies from consumers. As we will discuss later, we have improved visibility into the second half of the year and are adjusting up our full-year guidance as a result. Turning to direct-to-consumer, sales grew 9.2% year over year and exceeded $1 billion for the quarter, a first in our company's history. Growth was driven by continued strength internationally, which rose 15%, including double-digit growth in both our physical retail and e-commerce channels, and followed impressive prior year growth of 30%. Domestic direct-to-consumer sales grew 1.4% as we faced a difficult comparison to last year's 29% increase. Consistent with broader market trends, we observed lighter foot traffic in our brick-and-mortar locations in the quarter, but marked improvements in our e-commerce channel. Global demand for Skechers products remains strong, and consumers are purchasing across a broad range of price points, which speaks to the enduring appeal of our focus on delivering style, comfort, and quality at a reasonable price. The Skechers brand continues to build momentum in the market, and the expansion of our global direct-to-consumer footprint remains a key priority for driving long-term growth. In wholesale, sales increased 5.5% year-over-year to $1.13 billion. Domestic wholesale sales grew 14%, or $56 million versus the prior year, reflecting strong consumer demand for our product and robust order flow, a trend we see continuing in the second half of the year. Our international wholesale sales were essentially flat, as pockets of strength in many markets were weighed down by softer results in select markets like India
Mark,
and China.
explain what you're doing in the chat.
Supply chain disruptions from the Red Sea
Thereby,
crisis
others will follow you
negatively
and make it
impacted
easy
our
for you.
business in Europe,
Explain why you're
with
doing it.
deliveries shifting into the second half of 2024.
And keep doing that.
Now turning to our regional sales. In the Americas, sales for the second quarter increased 7.2% year-over-year to $1.1 billion, driven by domestic wholesale, which accounted for over half the growth. The Americas direct-to-consumer business grew across all markets, including double-digit growth outside of the United States. While the macro environment remains challenging, with pressures on discretionary spending, Skechers' commitment to delivering high-quality products at reasonable prices is resonating with consumers. In EMEA, sales increased 14% year-over-year to $492.5 million, driven by strong performance in our direct-to-consumer business, with double-digit growth across channels. Wholesale sales were softer than anticipated due to the aforementioned supply chain disruptions. We anticipate improvements in these delays over the course of the year, but we are continuing to closely monitor the situation and will provide further updates as warranted. In Asia Pacific, sales increased 2.2% versus the prior year to $564.2 million. In China, sales grew 3.4% year-over-year, 7% on a constant currency basis. We believe that China's economic recovery will remain challenged in the near term, but we are confident in the long-term opportunity for Skechers, given the strong consumer perception and demand for our brand in the market. In India, sales were negatively impacted by the implementation of new regulatory standards and other unfavorable market conditions. More recently, we have seen positive developments around the regulatory environment.
No, the S&P is not in the S&P 500. It's in the mid-cap 400s.
While continuing to prepare for the long-term opportunity we believe this market possesses. Gross margin was 54.9%, up 220 basis points compared to the prior year. The improvement was primarily driven by lower freight costs and a favorable mix of direct-to-consumer volumes. Operating expenses increased 340 basis points as a percentage of sales year-over-year to 45.3%. Selling expenses as a percentage of sales increased 160 basis points versus last year to 10.9%. As mentioned last quarter, this spending was largely focused on brand-building investments and heightening awareness of our innovative comfort technologies in new categories. General and administrative expenses increased 180 basis points as a percentage of sales to 34.4%, primarily due to higher rent, depreciation, and labor to support growth in our direct-to-consumer segment and compensation-related costs, partially offset by cost efficiencies realized in our distribution centers. Earnings from operations were $206.5 million, a decrease of 5.1% compared to the prior year, and operating margin for the quarter was 9.6% compared to 10.8% last year, primarily due to investments in brand building and global expansion. Our effective tax rate for the second quarter was 19.7% compared to 17.7% in the prior year. Earnings per share were 91 cents per diluted share, a 7.1% decrease compared to the prior year on 154.2 million weighted average diluted shares outstanding. On a constant currency basis, earnings per share were essentially flat at 97 cents per diluted share. And now turning to our balance sheet items. Inventory was $1.51 billion, an increase of 1.9% or $28.5 million compared to the prior year. However, as David mentioned, supply chain delays created a short-term imbalance between on-hand inventory, down 18%, and in-transit inventory, which was up nearly 100%. Overall, the composition of our inventories are healthy, and we believe this imbalance will be remedied over the course of the next quarter. Accounts receivable at quarter end were $1.03 billion, an increase of $87 million compared to the prior year, reflecting higher wholesale sales. We ended the quarter with $1.55 billion in cash, cash equivalents, and investments, and maintained liquidity of over $2.3 billion when including our undrawn revolving credit facility. Capital expenditures for the quarter were $112.5 million, of which $47.9 million related to investments in new store openings and direct-to-consumer technologies, $37.4 million related to the expansion of our distribution infrastructure, and $12.4 million related to the construction of our new corporate offices. Our capital investments are focused on supporting our strategic priorities, which include growing our direct-to-consumer segment and expanding our brand presence globally. During the second quarter, we repurchased approximately 879,000 shares of our Class A common stock at a cost of $60 million. And today, we are announcing a new $1 billion, 3-year share repurchase authorization, which replaces our existing program. We continue to deploy our capital consistent with our stated philosophy while maintaining a durable balance sheet and ample liquidity. Now turning to guidance. For the full year 2024, we expect sales in the range of $8.875 billion to $8.975 billion, and earnings per diluted share in the range of $4.08 to $4.18, representing annual growth of 12% and 18%, respectively, at the midpoint. For the third quarter, we expect sales in the range of $2.3 billion to $2.35 billion, and earnings per diluted share in the range of $1.10 to $1.15. Our effective tax rate for the year is expected to be between 19% and 20%, and minority interest is expected to grow in line with total sales. Capital expenditures are anticipated to be between $325 million and $375 million for the year. We remain committed to achieving $10 billion in sales
20,000
by 2026 and delivering long-term, sustainable, and profitable growth. We thank you all for your time today and look forward to updating you on our third quarter financial results, which we expect to release on Thursday, October 24th. With that, I will now turn the call over to David for closing remarks.
Thank you, John. Despite the recent challenges, we achieved a new
James,
second-quarter
you are a
sales
moderator
record growth in
on
both our wholesale
TikTok.
and direct-to-consumer business across the globe. This reflects the strong and broad-based acceptance of our products and our commitment to delivering the best in comfort, innovation, style, and quality at a reasonable price. As we navigate the challenges ahead, including the transit delays due to the Suez Canal closures and the regulatory changes in India, we see numerous opportunities to expand our business and are extremely encouraged by the demand for our brand. We are excited about the ongoing launch of Skechers football and the global launch of Skechers basketball. Recognizing that consumers want to shop for Skechers how, where, and when they want, we remain committed to growing our direct-to-consumer channel while also focusing on increasing our important relationships with our third-party customers. Going into the third quarter, we are tracking stronger than last year and believe the second half will be above our initial expectations. As always, we are grateful for the contributions of the entire Skechers organization and our valuable partners as we deliver profitable growth this year and into the future. Now, I would like to turn the call over to the operator for questions.
Thank you. At this time, we'll be conducting a question.
Please tap
and
the like
answer
button,
session.
please, and subscribe if you'd like to
ask
share
a
this.
question, please press star 1 on your telephone keypad. As a reminder, please
On
limit to
TikTok,
one
if we get to
question
20,000
and one
likes by the end of the show, tap with two
A
fingers.
confirmation tone will indicate
We'll
your line
do
is in the
a
question
song
queue.
in my studio
You may
behind me.
press star 2 if you'd
All
like
right.
to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Our first question comes from Jay Sole with UBS. Please proceed with your question.
I want to ask about the guidance. It sounds like FX and supply chain were a little bit headwinds in the quarter, impacted sales and earnings, maybe relative to what you thought, but yet you're raising the sales guidance and the EPS guidance. Can you just explain and dive into a little bit the sources of, the raise in the guidance? What's causing you to raise the sales guidance, and specifically what's causing you to raise the EPS guidance, given it sounds like these headwinds are still continuing?
Well, hello, Jay. I would say, the number one thing is the better visibility we have into the back half order book, particularly on the wholesale side of the business, and drilling down a bit from there on the domestic wholesale side, where we see really strong order flow. I'd couple that with, the ramifications of what we've seen on a supply chain side, delaying deliveries to our distribution function in Europe, still represent very good orders that are flowing into the back half of the year. So that's augmenting the strength we've already had. We continue to see very good DTC performance internationally. Like a lot of others, we did see some traffic declines domestically, although our e-commerce platform performed nicely in the quarter. So
Mark Saxby, you
taken
are a
all
moderator
together,
on
quite
TikTok.
frankly, we simply have better visibility now. We've got a very nice order book built for domestic and international wholesale. We're mindful of the challenges that are out there, some of which may persist, to one degree or another in the back half, but we believe we've adequately weighted that in the range of outcomes we could expect.
Got it. So, I guess just to follow up on that, John, you're saying that, whether headwinds coming from FX or supply chain, you're not really assuming those things alleviate in the back half. You're kind of assuming that there's some macro issues that are out there that persist, but yet you still feel confident raising the guidance given the visibility of the order book and given the acceptance you're seeing from the consumer for the product assortment, broadly speaking.
Well, we wouldn't raise the guidance unless we were confident in our ability to achieve it. I do think some of the macroeconomic headwinds we've seen, will persist to one degree or another, and we have those adequately captured, we believe, in our budget. I'd say the one outlier is foreign currency. It was particularly acute during the second quarter and has already turned around, but that did not save us in the quarter. If you strip that out, as we mentioned, we would have been within our guidance range. That was kind of the straw that broke the camel's back on achieving our prior guidance, but the underlying consumer demand is still there, and that's what's evidenced in the order book in the back half of the year, and again, the continuation of what we've seen on the strength of DTC internationally.
Fantastic. Okay, thank you so much.
Sure.
Our next question comes from Laurent Vasilek with BNP. Please proceed with your question.
Oh, good afternoon. Thank you very much for taking my question. I wanted to ask about the comments around U.S. DTC, around footwear, foot traffic, but then e-commerce being strong. There's a lot of concerns out there around just the overall environment over the summer and the footwear retail landscape. Maybe David, John, if you guys can comment about what you're seeing with the consumer. Is it weakening, or is it just kind of a blip, and then we can kind of see reacceleration for the third quarter for back to school?
Well, I'd admit it was a bit of an odd quarter. We did see some of the traffic slow down in our brick and mortar stores. That definitely had an effect. At the same time, though, our e-commerce platform did really well in the quarter. I think it's also important to recognize we're getting back into a position vis-a-vis our wholesale customers where they are better equipped with the right type of inventory. So I think when you think about the broader U.S. market, clearly there's abundant strength at the consumer. The last thing I'd note, which we mentioned in our comments, is we had an incredibly strong prior year, nearly 30% up on DTC. And so, just maintaining that growth, if you look at it on, some of your favorite 2-year stack basis, it is still an incredible 2-year growth rate. So where we go from here, I think, is going to be largely determined by what we see in the back-to-school window and then holiday. I would characterize our expectations as modest at this juncture. We're not, overweighting an expectation of domestic, reacceleration. But we also think there's plenty of consumer demand out there, as is evidenced by what we're seeing in e-com and in the wholesale order book.
Okay, very helpful. And then can you talk about the shift? Is it fair to assume a $50 million shift between 2Q and 3Q? Thank you very much.
Well, it's a fair question. I will say it's a little bit challenging to answer, only because, this has been an effect felt over the course of time. So it wasn't like, one ship missed a window, right? It's tough for us to quantify, but I think you can assume vis-a-vis our guidance for Q3 in particular, and just the known aspect of what's been impacting supply chain, particularly that Asia to European route, is that a material amount of orders moved into the second half of the year simply because they couldn't get to distribution in time to make the quarter. And keep in mind, there's always a little bit of that as we straddle Q2 and Q3, depending upon when shipments go. What I would say is absolutely concrete is the demand. The demand we're feeling for the product. As I said, it's evidenced in the order books globally. And so, we feel very good about finalizing out those orders and the normalization of the supply chain that we expect is going to occur over the next quarter or two.
Very helpful, Don. And I think last quarter, I think to my good friend Poser's question, you mentioned, gross margins could be, I know you don't guide gross margins, but they can be up 100 to 150 bits. Is that still the right way to think about it? And if so, how do we think about 3Q gross margins?
Well, I would say, this quarter was a little bit more than we anticipated. We picked up more of a benefit from freight and mix than we had anticipated. As we had said previously, we expect the benefit to get smaller over the course of the year. It did a little bit, but this was even a bit higher. I would say, we don't expect a lot more out of the balance of the year, but for mix related. Although, we are watching freight rates. We'll have to keep in mind that as we progress throughout the year, there's been some rate impact, obviously, from the Red Sea crisis. We have to balance that with the contractual rates that we're achieving, and so we'll monitor that. But when you put all that into the model, ultimately it would tell you that we don't expect as much lift over the back half of the year as we saw over the front half of the year, though that is consistent, I think, with what we had previously mentioned.
Very helpful. Best of luck.
Thank you.
Our next question is from Jim Duffy with Stifel. Please proceed with your question.
Hi, this is Peter McGoldrick on for Jim. Thanks for taking our question. First, I wanted to ask about the BIS regulations in India. You mentioned some local production and distribution. What's the magnitude of the local supply capacity relative to demand, and how are you planning for the progression of the regulatory environment, sort of bridging the gap, the timing to bridge the gap between near-term impacts and the long-term opportunity in that market?
The first thing I'd say is there was a noticeable impact from the regulatory environment. We definitely felt that, and the attendant uncertainty in the quarter. The good news is, we continue to build local production. I won't give a percentage, but suffice it to say it's one of our primary areas of focus from a supply chain perspective, and it's getting better and better. It's simply today insufficient to accommodate our our total demand. We have seen some
Jay,
positive
see
trends in
here.
the market with regards to certification processes, both of domestic and international manufacturing. I would expect over the course of the year things continue to get better, but it's, that's a market that's a little bit tough to call from a timing perspective on when things are going to change. But overall, we continue to be optimistic, both about the back half of the year, but ultimately that we will be able to, as a company, significantly develop what's needed locally, but then complement that with international manufacturing, and maybe even someday look towards India as an export production market for us. So it had an impact, a big impact in Q2. We believe that will get significantly better over the back half of the year. And again, I can't stress enough, we have definitely seen some positive trends of late, and that has been encouraging as well.
All right, thanks. Then I'd like to follow up on China. Revenue increased 3% with, despite the challenges noted on the 6/18 period. Can you talk about the trends outside of the key holiday periods and any consumer insights that might influence plans for the rest of the year and your plans for 11/11? And should we be looking for growth in the second half out of China?
We're definitely expecting growth in the second half, and I would argue that the first half of this quarter actually was pretty encouraging. It's also important to note they faced a really significant foreign currency headwind in this quarter with, I think constant currency sales were double, the growth rate of what we saw on a realized currency basis. 6/18 was definitely, not nearly as strong as we've come to expect over time. It's hard to read that through to the balance of the year because 6/18 is such a unique event and it's very promotional. As David mentioned, we saw a lot more price-driven activity on 6/18 this year, and so that simply, compelled a lot less growth overall than what we would have liked to have seen. As we also said, we continue to think China is on the road to recovery. We expect a better second half of the year than what we've seen thus far, but we are watching things carefully. 11/11 will certainly be a big event in the context of how that market is recovering. Again, I think the most encouraging aspect of what we've seen there is continued brand resonance, and I think outperformance relative to some other international brands, which I think speaks to the appeal of Skechers in the market, which we expect to continue to ride for the long term.
Very helpful. Thank you.
Our next question comes from John Kernan with TD Cowen. Please proceed with your question.
Excellent. Thanks. Good afternoon, John and David. Hope all is well out in Manhattan Beach. Maybe unpack the guidance increase for the back half of the year.
Let me turn off your moderation.
Is there anything specifically
it's not been going up. I don't know if it works if you're a moderator.
Perspective that
let's check it now. Continue if you are.
From where we were in Q2. It sounds like international DTC you've got good reads on and globally on wholesale, but just a little more color there would be helpful.
I think the best characterization we can give is, continued strength from DTC. We're going to pick up the benefit of the timing issue from the Suez Canal crisis in Europe on the wholesale side as well. And then, the domestic wholesale order book is very strong. I'd say those are probably going to be the lead factors for the back half of the year growth.
Okay,
I
I've
think
removed
also
you.
just the
Carry on, try again.
Some of the headwinds that we saw this quarter, particularly around some of the regulatory issues in India, the foreign currency. I think that probably makes up for most of the growth. But I would also say, we've contemplated some of the other issues. We feel like we weighted them appropriately. We don't expect it to be purely smooth sailing from here, but I do think the unique combination of events this quarter made it a bit more challenging than anyone had anticipated going in, and that's part of the reason why our initial kind of non-constant currency sales were below where we thought they would be.
I think it's fair.
James, could you tap the screen really fast? As a moderator, I want to see if it's working.
From June and July.
James, tap the screen.
Shifts from December and January that we talk about every year. are just more extreme in this particular case, simply because the biggest part of our shipments, for the most part, for domestic and domestic wholesale and European wholesale, is the end of June and the beginning of July. And while John says it's very difficult to see, what went early, what went late, we're getting a better flow, even though it takes a longer time to get there from Asia into Europe. So you can pick up, June to July, as in December to January, we commented this year. While that doesn't guarantee the whole quarter, it's a great place to start, and we see demand picking up in a number of those places. So, also on the U.S. side, just to reiterate what John said, because I think it's very important, given a 29-30% increase in our direct-to-consumer business last year, to hold that while we have a 14% increase in domestic wholesale and have increasing demand and in a difficult time, just shows the strength of the consumer has shifted from just one to the other and picked up some new consumers. Some go direct to consumer, some go to their favorite, wholesale partners that we have. So the overall business continues, and when you think about it, we pick up a wholesale sale in wholesale in the U.S. So there are more unit growth with the 14% in wholesale than there would have been in direct to consumer. So that shows more demand just going to a different place. I think both things line up very well for us, which is a significant piece of the increase in the guidance into the third quarter.
That's really helpful. Thanks. So just maybe a quick follow-up on the supply chain costs and some of the timing issues. It looks like spot freight rates from an ocean perspective have skyrocketed the last couple of months. I know you don't buy on, do your
J-Long donated
$9.99
through a super chat.
Add
my names to the list, please.
Maybe Q4 and 2025. Do you see this as a headwind?
Well, John, I think you first point out a very important factor, which is we don't expect to be feeling the effects of some of the higher spot rates until Q3 and probably more acutely in Q4, simply because of the time it takes to turn the inventory. Also, we're not buying, as you noted, everything at spot. There certainly are opportunities and needs we have to go into the spot market. So our weighted average container rate is well below where the spot sits. There's some other factors at play that we think will help offset some of that, but at the end of the day, until we see a culmination of that increase and, quite frankly, an improvement overall in both the flow of goods, as David mentioned, but also in the rates, which we expect is forthcoming, it's tough to call the final outcome other than, right now we do believe we've incorporated that into our guidance. It's one of the reasons why, in response to Laurent's question, we were cautious about gross margin improvement from here. We believe it'll be relatively consistent improvement or consistent to last year, and that's why, is because some of that freight will come into play.
Understood. Thanks. And maybe, David, just one follow-up on the customer acquisition. Can you talk to the cohorts you are acquiring, some of the growth in the newer categories you've launched recently, and how they're performing?
Sorry, say that again. I missed it.
Can you talk to customer acquisition and some of the cohorts you're acquiring with some of the newer product launches?
It's hard to tell. Our biggest push right now really is not moving out to the consumer, and that's on our performance athletic. And we're just going to launch our first football/soccer in Europe and are moving to a more commercial side of basketball. I think what's happening is that our features and our comfort are expanding the base of our existing customers, and we're acquiring from other brands just along our normal mix. We're still looking forward to achieving significantly higher acquisition as we get into more performance athletics, but we're at just the very beginning of that.
Understood. Thanks.
Our next question comes from Alex Stratton with Morgan Stanley. Please proceed with your question.
Perfect. Thanks a lot for taking the question. I just wanted to focus on international wholesale. Obviously, it slowed a little bit quarter over quarter, but seems like from your commentary, some of that's just temporary from issues like the Suez Canal. But then you're also not as positive on China, it sounds like, as you were maybe 3 months ago on a near-term basis. So can you just talk a little bit about how we should think about the shape of the back half, what type of growth you're expecting there?
So I would say I think Q2 was a bit distinct in some of the impacts we felt, particularly on the international wholesale side of things. We mentioned Europe, we mentioned India, and they had an outsized impact on our results versus our original expectations. I would still characterize our view on China as a net positive. Certainly, we expect growth in the year. And as we've said about China over the last couple of years, we've been somewhat surprised at the rather consistent improvement unabated we had seen. We know it's a market in recovery. We know there are some macro challenges. So, again, I don't know that this outcome this quarter is particularly unanticipated in the grand view, but obviously we didn't pick the timing right, and that's why you saw that. But I would also note, again, there's a big foreign currency adjustment on the Chinese sales. They would have been double, the growth, which was more. Again, I would characterize China certainly as a market we have continued optimism for. We do expect there will be bumps in the road. This was one of them, but it doesn't diminish in any way market and the opportunity we think that market presents.
Great. Maybe one quick follow-up just on selling expenses. I knew they grew quite a bit this quarter, I think about 25%. How should we think about that into the back
Two.
the quarter? Should that start falling off, or what are the puts and takes there?
We'll continue to invest over the balance of the year, but the level of increases we do not expect will be similar. And that will, continue to be the case kind of in the next quarter and in the next quarter. And then, coupled with some of the timing-related issues we just talked about, it certainly was a more severe point of deleverage on the quarter than we had originally expected. We believe some of that will get made up of over the back half of the year now that we've seen some of those sales move around and, more strength and visibility into that back half growth that we've talked about.
Great. Good luck, guys.
Thank you.
Our next question comes from Rick Patel with Raymond James. Please proceed with your question.
Thank you. Good afternoon. I was hoping you can dig further into your expectations for wholesale for the year. So I believe in the past you've alluded to global wholesale being able to grow in the high single-digit range. Do you still see this as a reasonable outcome, just given the strength you have on the domestic side? And then just as a follow-up, how far out is your line of sight for the wholesale order book as you think about domestic versus international?
So I definitely think that expectation for the full year results for global wholesale is accurate and probably, in all honesty, based on what we see at the moment, probably more likely to be at the low end of the range, but definitely continue to see good opportunity on the global wholesale side of things. From an order book perspective, we feel really good about what we see. I think the only factors we need to keep our eye on is timing, as kind of bedeviled us this quarter in Europe in particular. But overall, I would say conditions are improving, as David mentioned. The flow of goods is becoming more reliable and more predictable, which always helps. So again, we would not have raised the guidance. We would not be speaking particularly about the strength we see if we hadn't the benefit of some very strong order book activity, and that's certainly the case.
Can you also talk about sourcing? Maybe remind us how much exposure you have to China, and just given the headlines everyone's seeing about potential tariffs and whether they may or may not increase down the road, just how we should think about mitigation strategies that you may be working on right now to deal with that in the future.
Yeah, there's not really been a fundamental change to our overall sourcing footprint, which we've commonly described as kind of being, depending on the time period, somewhere in the 40-ish% range for China, 40% range in Vietnam, and then the balance kind of spread across a lot of other countries. But that can ebb and flow depending upon what we're making when. I would also point out within that, obviously we have a pretty significant business, in China, so there's an element of what gets manufactured in China that serves the local market quite well. I would also note that we continue to look for opportunities to diversify our production. The biggest challenge there is, quite frankly, the rate of growth we're seeing in, our unit volumes. So we have to run just to keep things static. But as a result, we're seeing, really good trajectory, as we mentioned, in India, Indonesia, some other markets, Turkey, Mexico. So again, it's something we'll continue to work on. I think in response to broad hypotheticals about tariffs and what may come, it's really difficult to react. I think the one thing that we've learned is, you can't really react to hypotheticals, but you need to be very quick to react to, actual results. And so we'll be poised to react should we need to, although I would note again, it's going to be limited by that footprint. And I'd say, the footprint of the footwear industry and apparel industry as a whole. I also would note that even if there is such a thing as a tariff impact somewhere down the road from, whomever ascends to leadership in the United States, that's going to be a market-wide issue. That's not going to particularly, impact just one company. And so, our anticipation is you're going to have to see, quite a bit of adjustment across the industry, not just with, one brand or another.
Thanks very much.
Our next question comes from Jasala Wong with Evercore. Please proceed with your question.
Hi, thanks for taking the question. Just a bit digging into the supply chain disruption to Europe. Is the flow of products already kind of coming in through in the third quarter? And if so, do we expect international wholesale to see a big pickup on the growth there? And is there any risk of congestion leading to additional cost in the third quarter or fourth quarter from that? And then just on China, I think you mentioned ex-China, it was up 7% in the quarter. Any early reads into trends for July? And, back half, do we think this, high single-digit number holds ex-FX into the second half? Thank you.
On the supply chain, I think the best answer I can give you is an illustrative data point on inventories, and we mentioned this in our script. Our on-hand inventory levels in Europe at the end of June were down 40%. Our in-transit inventories were up over 150%. So it gives you a flavor of just how much got delayed into the quarter. We are seeing that flow improve. A lot of that in transit is, quite frankly, already landed or is in the process of landing and will get processed through. And it is, again, one of the reasons why, we're confident enough in the bookings to be able to raise the guidance. That will clearly manifest on the international wholesale side, particularly in Europe. Insofar as China is concerned, I don't want to get down to kind of country level guidance, but I would say from the get-go this year, we expected growth. We continue to see growth. We do know that there will be hiccups given the recovering nature of that market. On a constant currency basis, the growth was while not what we had come to expect or hope for, it was a solid high single-digit number. Whether or not that continues over the balance of the year is what we have to see. That nothing from a read perspective we can give you in July thus far, given how early it is. Plus, just the nature of that market and how it tends to recover after these big selling events. But again, our expectation continues to be for growth in the year. We are positive on the long-term opportunity in the market, and I think we're going to continue to work both the product that is obviously resonating across the globe in that market, as well as tactics specific to the market, which have been paying off, and we will expect will in the future as well.
Got it. Thank you.
Our next question comes from Will Gardner with Wells Fargo. Please proceed with your question.
Hey guys, thanks for taking my question here. Just curious, digging into China a little bit more. Can you just talk a little bit about how much of the China inventory is China for China versus imported to the U.S. Can you give us a sense of that?
Well, it's not a static number is probably the biggest challenge to do that. But, I mean, obviously with about 45% of our production coming from that market and a mid-teens % of our overall sales coming from that market, you can see it's no small quantum of goods. It's never that precise, though, because, for production efficiency purposes, we're not always going to run, a product in the market that's made for the market. Sometimes that's not the most efficient thing to do. But I would consider it to be a meaningful component of the overall production, in China, is for China.
Got it. And on ASPs, it looked like we saw some deceleration. They turned negative this quarter. Just curious if you have any color there, both on the wholesale side and the DTC side.
Yeah, I mean, nothing really outlandish. I think it was, we saw small movements. I think more than anything, quite frankly, that's probably product mix associated, certainly on the domestic side of things. On the international side of things, there's definitely some of the FX impact gets bled through on the ASPs. We don't adjust those for constant currency. On the direct-to-consumer side of things, there's small effects from mix. Plus, we continue to roll out more and more product with our Skechers hands-free slip-ins technology as well as other comfort technologies. And so as those become more prevalent, just the life cycle of the product, they get included on, certain promotions a little bit more than they would have been in the past. So that gives, it has a little bit of an effect on ASPs. But overall, I would say, generally speaking, they were pretty consistent.
Got it. And just maybe one last one for me on the DTC. So you said that you saw some traffic slowdown in brick and mortar, but a pickup in e-com. Can you maybe just frame out why you think that happened, what the delta was between the two, and why you think there was slowdown traffic versus in brick and mortar versus e-commerce?
Well, I don't know that I have the answer to that. In all honesty, I would say it was pretty consistent with a broader industry trend that we saw reported beginning in really late May and continuing on into June. I would say what we saw was pretty consistent with what the industry saw. On the e-com side, I mean, I think that's probably mostly a testament to having the product people want available and our ability to fulfill quickly. And, clearly a consumer could get that in a store as well, but if they're not in the practice or, not going to stores, the e-com solution is a great fallback, and having the right product, right inventory, right marketing available to drive that, I think was the difference. I would also just note, again, last year, our comps on the domestic direct-to-consumer side of things were fantastic, and our e-commerce comps were actually trailing a bit because of a prior year issue. So there's some of it also that is just the comparison point is a bit different for each at this juncture.
Andrew Michael donated £4.99 through a super chat towards the Chopper T-shirt, Martin.
Only determined by our own stores and where we sell Skechers. People may go to different department stores or different malls or different parts to buy other things or other things that are being promoted and buy footwear on the side for their family, always searching for Skechers. So it depends on whether more people shop online through inclement weather, where it is, and regionally, and what's on promotion, what they're shopping for, or what they're doing for entertainment. So they'll go and shop in different places at different times for various different reasons, not all pertaining to the way we promote or where our shoes are offered specifically. So that's why we're constantly saying that we want to be where our consumer prefers to shop, whether it's for Skechers or not. And we promote all three, knowing we capture that consumer somewhere along the line.
Got it. Thank you.
Our next question comes from Christina Katai with Deutsche Bank. Please proceed with your question.
Hi, good afternoon. Thanks for taking the question. I wanted to ask about EMEA up 14%. It continues to do really well. Can you maybe unpack what you are seeing in the market for underlying demand? Have you seen any changes in consumer buying patterns at all? just maybe comment on the exit trends that you saw in the region, and if there's anything that we should expect for sort of performance between the third quarter and the fourth quarter.
The strength came out of DTC. I mean, the DTC numbers out of EMEA in particular, quite frankly, continued to surprise us to the upside. The products resonating. We continue to build into strength on our retail presence there. E-commerce also was an advantage in that marketplace, which, as you recall, is really something we only began last year and have, I think, gotten better and better at it. So that really came down to consumer demand, and I think that's why we also saw really good sell-through trends. We do expect that to continue. That is a consistent trend we've seen from the beginning of the year through today, and so we're pretty confident that will continue, despite all the challenges that people have talked about the last 2 or 3 years. The EMEA direct-to-consumer business has continued to thrive.
Got it. That's really helpful.
Sometimes it's a matter of timing as well. When things slow down in Europe and they pass through our distribution center, you have to realize at wholesale it passes through basically 2 distribution centers. It goes from ours to theirs, and there's a lag. So sometimes, as it happened when the opening after the pandemic, our direct-to-consumer outlets, both online and stores, will have more current inventory slightly faster. So you see the pickup in direct-to-consumer, and as it passes through, just like we're seeing here now, there's a leveling out at direct-to-consumer as the inventory and our newer product catches up with the wholesale side as well. So we feel confident in demand in both areas, but there's timing of availability of new inventory changes, especially as you get into a new season when there's so many supply chain disruptions along the way.
That's great. Thank you for that. I wanted to follow up also on domestic trends. Just maybe if you have any sense on how back to school is performing, and just how would you characterize the domestic promotional environment? Thank you.
I would characterize the promotional environment as largely the same as what we've seen the last couple of quarters. Nothing jumps out to us as indicating a significant change, now or in the near future. I think it's pretty early to tell on back to school. We're only seeing the initial, glances at it. So I don't know that there's really a read we can give that's meaningful at this juncture.
Our next question comes from Chris Nardone with Bank of America. Please proceed with your question.
Thanks, guys. Good afternoon. So regarding your U.S. direct-to-consumer business, can you clarify whether you've changed your expectations for the back half of the year relative to your thoughts last quarter? I'm just trying to gauge whether your improved sales guidance is solely due to the better-than-expected order book trends. And then regarding product, if you can just elaborate a little bit more on what categories are outperforming and whether you're still seeing a broader trade-up within your portfolio to your comfort technology products.
Yeah, relative to domestic DTC, we had held back our view on the back half of the year in our earlier guidance. So I would say from this point, we really haven't changed it markedly, but we had always, I think, been conservative about our view on the domestic DTC front, knowing in particular what significant comps we were up against. But to more precisely answer your question, you should construe that the vast majority of the the elevation in our expectations for the year is coming from the wholesale side domestically and the order book there. Relative to product, it's really not a division or a gender, only because we're seeing growth across a lot of those. I would say it is, as we've spoken about the last really year and a half, 2 years, maybe even longer, it's the benefit of the comfort technologies, and they are continuing to lead consumers to trade up within our portfolio. But that's clearly continuing to resonate. Both Skechers Hands-Free Slip-In, which is our newest, but also many of the others, Arch Fit, Max Cushioning, our Hyperburst technology, the traditional wide fit that we offer. All of those are combining to very much translate at the consumer level to increase conversion, because they know with those technologies, they're going to get more comfortable shoes than they can otherwise obtain in the market. So we are continuing to see that trend hold true, but our expectations were and continue to be, I would say, fairly modest on domestic DTC for the back half of the year.
Thank you.
Our next question is from Tom Nikic with Wedbush Securities. Please proceed with your question.
Hey, thanks for taking my question. I want to ask about SG&A. Is there anything from a timing perspective that we should think about, Q3 versus Q4? Is there any lumpiness in marketing or anything like that as we work through our models?
I knew I couldn't get off a call without somebody asking about G&A. The only thing I'd point out is I appreciate that, Tom. We had mentioned previously that we were consciously over-investing in Q2. I think you can take it, as that. It doesn't mean we're not investing, but I think the investment relative to the growth in sales we expect will be much more in line. I would say absent that, no, nothing really stands out. But that should mean to you that, we'll continue to invest in new stores. We have new distribution coming online. And, we're going to continue to put money into marketing. I will note, though, it was a line in our prepared remarks that we did see improved efficiency on the distribution side of things, which was good to see because that's been a reflection of a lot of work over the last years, given some of the challenges that we've had with supply chain. So that was actually a nice bright spot as well. But I would generally say you can expect continued investment on the marketing side, but not at the year-over-year increase that we did this quarter. This quarter was a focal point for us, and we do believe that'll pay off kind of going forward.
Understood. And if I can follow up with one more. On U.S. wholesale, have you found that at the consumer level that the acceptance of and the excitement around the flip-in products and the new technologies are as robust as what you had seen in DTC previously?
Yes. I think some of that, though, to be clear, is somewhat reflective of the timing through which, wholesale accounts have taken up the technology. What we see is when they order the technology, when they order what we're bringing to market new, they see incredible response for those technologies. And I'd say very, very commensurate with what we've seen in our DTC.
Great. Thanks very much, John and David, and best of luck the rest of the year.
Thanks, Tom.
We have reached the end of the question and answer session. This concludes today's conference. You may disconnect your lines at this time, and we thank you for your participation.
There we go. Another earnings call. Thank you very much for joining me this evening. Right, very shortly, this video will be available on as its own video. I shall edit it and upload it and improve the audio quality. So there we go. On TikTok, did we make the 20,000 likes? No, we didn't. We got to 9,800. Here it is on the screen. We got to 9,800. There it is. I don't know if you can see it just there. They are at the top left-hand corner, right at the top, 9,800. If we got to 20,000, what we were going to do is go back to the studio and do a song. I'll tell you what I'll do. There are 23 people in TikTok right now, and there are quite a few of you in YouTube. So here we go. We could do this in 5 minutes. If everyone jumps on TikTok right now, let me give you the link to TikTok and literally, let's do it for 5 minutes, and then we'll come straight back to YouTube, okay? So let me give you the TikTok link. Here it is. All right, here's the TikTok link. There you go. Basically, if you're on your phone, it's Martyn Lucas Investor. I'm live right now. There you go. Come on in, and the best way to do it is with two fingers like that. If I do it right now, look, with two fingers, if I go over to my phone, look. See that? That's me. That's me tapping with two fingers. All right? So, if everyone does that for maybe 5 minutes, not even 5 minutes, we'll get to 20,000. We're already at 10,200. And when you get that, can you see that? Whoops. When you it's hard to do myself because I'm trying to do everything else. But if I do it, can you see what happens? If you look at the top, the red line goes across. Can you see it? The red line goes across, and when it gets to the top, it explodes like a thing. You'll see it now. Watch. And we'll get to 20,000 in 5 minutes, and then we'll do a song at the end, and we'll do it live on TikTok too. If you keep going, it's hard to do. I need two fingers really, but I'm trying to do it with one. Come on! I'm so close. It's really, really hard with one hand. You need two really. I can't really do it in this position though. Come on, it should explode any second now. Oh, come on. There you go. See it? There you go. It explodes. So it's now 11,500. So if everyone does that, there's 23 of you on TikTok. There's a few of you on YouTube. Jump in. It should take no more than 5 minutes. If everyone does it, it'll take a minute. Really, it will. And I'll jump back to the studio and do a song. So what we'll do, we'll turn the phone round like that. And we'll do a song on TikTok. We've never done that before. That'll be interesting. So anyway, I'll leave that with you. It's 11,500. We'll give it just 2 minutes. If not, that's fine. We'll end this. Off back to TikTok to like James. I can't get on there, Andrew. Why not? Anyone can get TikTok. Oh, hello, James has gone mental. Look, he's gone mental again. He's done a special gift there. Thank you, James. And if you look on the screen, if I refresh, 12,000 likes now. If I do this, you can see James tonight is the #1 fan on TikTok. Look, I'll show you this. There you go. See, it says there, look, James, #1. User 92 is 2. And I think it's Chef's Stephen is #3. There you go. 12,100. It's going up pretty quick. All right, and then we'll do a song. Anyway, let me just update you with what's going on for the morning. I'll come back to TikTok in a second. Let's just go back to the stocks a minute. I'm going to put this out as a video as soon as we finish this. The S&P is starting to stabilize, which is what I want. I want consolidation. I want the bottom of the market. That's what I want. We've seen a sell-off. This is what we want. Perfect time to trade. Invest as you buy the sell-off, and you want to get there. 12,300. Yeah. It looks like there's not enough people doing it. What it's doing, if you notice the people watching now, it's gone up to 32. It starts to go up really quickly because if more and more people do it, it goes up. TikTok shows more people. So basically what we're doing, if you want me to do a song at the piano behind me in a second, we need to get to 20,000 likes. There's 29 people in there. If everyone taps the screen like that with two fingers for about a minute or 2 minutes now, we'll be there. But poor old James, I think he's doing it by himself. Anyway, 12,500 now. Right. So the market is stabilizing. I'm going to put this out as its own little video in a minute. So let's just go through and see our positions. You can see there's my position there. And 103,000 now, and $5. So we've had a bit of a comeback since the bell has gone. After hours, it's come back a bit. All right, let's go for all our positions. What are we up to now? We are now at 13,000. Yeah, 13,000. Right, the overall markets are starting to come back up again. Virgin Galactic, what a great day that's been, and a great week, 4.62. But we're only coming back up to this resistance level. And then normally, every time it's happened over the last year, it rejects and just goes lower. Let's hope it can break through. If it breaks through, that sets a whole different tone for Virgin Galactic. There's no reason why it would, though, at least for another year. But let's hope it does come off, especially as Zach's here today. Absolutely. The S&P is down, but coming up. Amazon is going flat. Apple going flat. Next Era Energy selling off from yesterday. Quite a sell-off after yesterday. Enphase Energy is holding up. Coca-Cola is up. J&J, absolutely wonderful, heading towards $200. Chevron up. Tesla pushing up again. Rivian, rubbish really. McDonald's going down. Google going down. Oh, hello. Here's a little bit buyback. It really is undervalued now. I really think it's a good time. I'd rather buy it for the S&P, but that's just me. Some of you who want to trade a stock could see an opportunity there. Definitely. Microsoft. Look at that. Look on the after hours. Look at that. Straight up, look. That's quite a bit. If you look that was down 0.57. Hang on. Can't quite see it. What was it? Down 0.64. Oh, it's just dropped. It was holding. What was it? It was about there, 0.64. Yeah, that's about 0.5%. 0.5% after hours there. What are we up to now? Up 13,500. Let's put James on the screen because he's going absolutely mental tonight. He's determined, but it's just James, unfortunately. So I don't think it's going to come off. Unfortunately, if it was a couple of people, it would do it. But poor old James, he's on his own. So we've run out of time, really. I've got to get off because I've got to put these videos out before I close the show. So I'll just give you an update, James, so you can see where we are. I think you can take a break, mate. We're not going to get... Oh, Mark Saxby's back. Mark Saxby's back. He's plugged his phone in. 3,100, 3,200, sorry, 13,200. It's going up now. We've got a couple of people joining in. Let's see, 13,300. Yeah, we'll try. The big man's coming. Nice, 13,400. It's going up quickly. Okay, if we get to 14,000 in the next minute, I'll wait. If not, I mean, we could do it, but there's 21 people being lazy asses, just sitting there going, I can't be bothered. All right, but if we get to 14,000. In the next minute, I will carry on. Oh, bloody hell, it's going up quick. 13.5, 13.6, 13.7. Okay, I'll join in as well then. If you're all that determined, I'll join in. 13.7. Okay. We're all going to do it now, are we? Okay. I'll do it as well then. 14,000, 14,001, 14,001. 14,002. Bloody hell, why did I start this? I want to get going. Can everyone join in for it'll take 1 minute. Virgin Galactic, I just got recognized as one of their rising fans on Meta. Yes, congratulations. Fantastic. I do that on my page as well. I recognize people, but if you engage with them, more than anyone else, they recognize that. Yes, I do the same thing on my page. Congratulations. It means you've been very busy. 14.8, 14.9. Okay, I'll join in. If everyone's going to do it, I'll join it. 15,000. 15,000. Okay. Invite to join. Accept. Somebody wants to join in. Who wants to join in? Somebody wants to join in. Who's that who wants to join in? If you want to join in, who's that? Someone called TV Ghost wanted to join in. Who's this? Match invite. Oh, it's a competition. What have we got to do? What have we got to do? Oh, I see. We got a punch. Okay. So you punch for who you want to win. Okay. Look. Can you see that? We're having a little battle. We're having a battle now. I'm winning. They are. If you want me to win, you bang on my face. All right? If you want TV Ghost to win, you bang on his face. Come on, everybody, bang on my face. Do the likes on my face. Come on. 16. Come on. 16. I'm trying to, it's like a little battle. Come on, tap as fast as you can. Everybody tap on my face as much as you can. Come on, fast. It's 16-0. Oh, Pippa's joined in. Is that Pippa? Hello, Pippa. You joined in. Come on, Pippa. Everybody. When do we win? We must be winning by now. Oh, I see. We've got 3 minutes. See the countdown? I get it now. Now I get it. Oh, Pippa, look at it all coming in. So ready? We've got 3 minutes and 45 seconds left, and we should win. Does anybody want to take me on? Does anybody else want to take me on? Pippa's giving flowers and roses. Hello, Pippa. It's great to have you here. This is a lot of fun. I'm enjoying this. TV Ghost, mate. Where are you? You're in the dark watching TV. What's all that about? We're going to win this. Who wants to take me on for a battle? Pippa, do you want to take me on? 3 minutes to go. We're smashing it. We're smashing it. No one's going to beat us. Right? I'm loving it. Whoa, Pippa's all over the screen. Is Pippa going to become my top gifter in a minute? She could do. Oh, look at this. Ba-da-ba-da. Yes, win. We won. We absolutely killed it. We crushed it. Thank you very much. Yes. Hang on. What am I looking at now? I think that's it. I think that was the end, wasn't it? What's going on? TV Ghost. How do I stop that then? TV Ghost, watch live. Now, how do I end it? How do you end? Hang on a minute. How do you end this? Okay. Where you gone? I'm still here. I don't know where I've gone. I'm still here. I don't get it. I'm still here. I don't get it. Is it because I followed somebody? Is it because I did a thing like that? I don't know. It says I'm live. Where did I go? Where did I go? I can tell you I've got 17,000 likes now. Just let us play games all day. I know. I haven't gone anywhere. I'm still here. I don't know why it's doing silly buggers. I have no idea. I don't know why. It's weird, isn't it? It's weird. What's going on? This live is no longer available. Oh, so looks like I got banned again. Because of that person who came in. That's weird, isn't it? What the hell's all that about? No, hang on. No. What is going on? It says I'm still live, but it's just not on the screen. Oh, try again. That's really annoying, isn't it? What's going on? So it says I'm live, but I don't seem to be live. We got 17,000 likes. We didn't quite do it. Right. Okay. I've gone back live again. See if it works now. I went back live again to see if it would work. Well, I ended up it seemed because I accepted that lie from that person. This is the trouble with TikTok. It's just full of so much scamming and stuff. Because I joined in with that person, I'm now not able to go live. It's always the same. I should be live now. Let me just open and close it. Doesn't show I'm live now. Okay, let's try this. And let me reopen it up. Yeah, your arm hurts. Yeah, it's not supposed to hurt, is it? Let's be honest. Try again. Okay. I'm live again now. Let's see if it works. I just restarted the app. It all happened after There you go. There you go. I fixed it. It was something to do with that person. Maybe that person was banned. So I won't be doing that again. So I will accept. Basically, we got to 17,000. We need 3,000 likes more. So I'm going to stick with you now because you put a lot of effort into that, and it only seems right that I should honor what I said. So 3,000 more, and we'll do it. So I'll tell you what we'll do. If any of you challenge me to a fight that I know, I'm not going to accept it from someone I don't know. So Mark Saxby, if you challenge me to a fight, I don't know how you do it. Let me see if I can work it out myself. How do you challenge someone to a fight? Because that was funny. I liked it. Multi-guest live request. Request to join as a guest. Grab your chance to be the next guest. You could be notified. Okay. If any of you challenge me to a fight, I'm not going to accept it from someone I don't know this time. Rose gift. How do you do? Oops, a daisy. Okay. Does anyone know how you do it? Anyone know how you do it? I ain't got a bloody clue. Swipe up. Gaming. Gaming live videos, no. Does anyone know how you do it? If I scroll left, it's there. Does anyone know how to do it? We've got 3,000 more likes and I'll do it. But does anyone know how you choose a fight? Loading. Community Fest. No idea what that is. Explore. Following. Gaming. Don't know what that is. Get a member badge. Send a heart. Send heart me and join. So you can become a member. Oh, there we go. Martyn Lucas Investors Team. Oh, you can be a member of my team. You can be a member of the team if you join for 1 coin. There you go. Who wants to be a member? How do you do the fight? James, can you work it out? Can you work it out how you... can you show me? Can you challenge me to a fight? I don't... And then tell me how to do it. Thank you, Andrew Michael. It's great to have you here. Sorry, we're having a bit of fun, really. We're just larking around. We're just larking around tonight. So I want to have a fight with someone, but I don't know how to do it. Multi-games. Request to join as a guest. Show live status. Don't show live status. Okay. Request. There you go. I have asked to be a guest on my account, and that didn't do anything, so I'm not quite sure what that's all about. 1 viewer is requesting. Guess. Oh, I see. Invite. Oh, James, I've invited you to join me. Accept. Okay, I've accepted. You'll connect using audio only. There you go. Apparently I can connect to myself. So I'm going to disconnect. I don't like the way you don't know how it works. Disconnect. There you go. Disconnect. Thanks for joining. You may want to follow. Okay. So multi-guest live. No, that's the preview. Multi-guest live. Rose gift. I don't know how you do it as a fight. Clear display. Oh, look at that. You can have a clear display. Show display. It's bloody complicated, isn't it? James 007. Follow back. Gift gallery. James 007. Gift gallery. Okay. What do I do here? Oh, there you go. I can go hi. There you go. That's how you can add someone's name. Subscribe. There you go. I can subscribe. Oh, subscribe, 10% off. A new subscriber offer. Ooh. Isn't it annoying? You just don't know how it works. I've had lots of people do it. They just start challenging to fight me, but I just don't know how you do it. I don't seem to know how to do it. Become a top viewer. Get your no top viewers yet. Send a rose to be. There you go. What's that? Top viewers. That's top viewers. Join the community. Subscribe. Subscribe. I don't know. I haven't got a clue how to do it. I haven't got a clue. If anyone works it out, I've had loads of people challenge me to fights. It's normally when they connect to you. So at the bottom of the screen, can you see it at the very bottom of the screen? It says multi-guest. That's where people do it. So you have to connect to me, but obviously I can't because the camera's plugged in. So if you can click that button there and request to join, that's the first part, I think. And then once you've joined, you can request for a fight. So if anyone on TikTok can request to join with me, is anybody on TikTok right now who wants to do it? I think once you connect with me, then I'll be able to do the fight thing. So, James, Mark, Saxby, you there? Just click on it, the connect to me, and then let's see if I can. That's where you start the fight. I think it is. I think that's where you do it. I'll leave it just for 10 seconds. Otherwise, I've got to go off because it's 5 o'clock and I haven't done the videos yet. So we'll do it again tomorrow, shall we? We'll work it out tomorrow. We didn't quite get to the 3,000 anyway. All right. I'm going to knock it on the head. Thank you ever so much, everyone. We'll see how we go tomorrow. Yeah, I've sent you 3 invites, James, but you've not accepted them. There you go. Right, I'm gonna let it go. Let's wrap up. Let's wrap up now. All right, guys, that's it from me. Now, before I go, runs out, I think, tonight, depending on your time zone. It runs out if you want to get anything from the shop. It's our best ever discount, 20% discount. Here is the link to the shop. Here it is. It runs out tonight or sometime tomorrow, depending on your time zone. So if you want to go and check that out, you can. Let me just close all those windows down. All right. There's nobody watching. I've annoyed everybody doing TikTok. See, this is the trouble. This is the trouble. It's crazy. Yeah, all my numbers have gone. I've never had 9 people watching. That's the worst number I've ever had. That's not good. 7. Oh my gosh. Nobody's watching. Everyone's buggered off. That's terrible. I'm literally talking to myself. I've never had that before. Is everybody on TikTok? Oh, Pippa. Pippa, can you try it? As there's nobody here, doesn't matter. Pippa, can you connect with me at the bottom of the screen? It says guess. And if you connect with me as a guest, I think that's where we have a fight. So I'll send you an invite. I've sent James an invite. I've got one here from somebody, but I don't know who that is. There's Pippa. Hello. Hey. Look at that. How do I make you bigger? Can I make you bigger? Expand. Hey. Look at that. I don't know how I've done that. That's brilliant. Right. Oh, you disappeared. What was the bloody point of that? What was the bloody point of that? Oh, that's ridiculous. You disappeared. Now I don't know where I am. Yeah. Oh, there you go. You got filters on. Oh yeah, filters on. Now, how do we do the fight thing? Do you know how we do the fight thing? Have you any idea? I can't hear you. Oh, hang on. I could hear you if I turn this on. Hang on. Okay. No, I can't. Oh, hang on a minute. Yes, I can. I should be able to hear you now. I can't. Oh, hang on a minute. Yes, I can. Okay, say something. Now.
You keep going really low.
There you go. I can hear you now. You keep coming up. There you go. Right. So how do we have the fight? Do you know how the fight works?
Can I see battle?
Right. So how do we have the fight? Do you know how the fight works?
It should be like come up at the bottom of the screen with with battle.
I don't see it.
Bottom of the screen with battle.
I don't see with battle.
Neither do I. It's gone.
I don't see with battle. Yeah. It's very, very confusing.
Wait, hang on. Let's make it bigger.
It's very, very confusing. Right.
Wait, hang on. I think let's make it bigger.
This is very confusing. Right. This is very confusing.
Head rebel. Head rebel.
There's nothing there, is there? I can't see it. It's too bloody complicated.
Oh, just will then.
I can't see it. Yeah, I know. I bloody heard you.
You should be able to though. Hang on.
Yeah, but you can't, can you?
Oh, sorry. You should be able to though. Hang on.
Yeah, but you can't, can you?
Oh, sorry.
Battle. I don't know. Countdown, microphone, camera. I don't know. No. Countdown, Pippa, camera. I don't know. How do people do this?
Post our settings.
How do people do this?
Post our settings.
Ain't got a bloody clue. All right. Well,
bye.
Thank you for joining in, but I'm going to let you go because I've got to finish my stream. Well,
I'll find it.
You find it, you let me know, all right?
Okay, I'll find it for you.
All right, spot on. Hello, goodbye to Wales.
Okay.
Bye. Bye. Hello, goodbye. There we go. Now that was kind of good, but kind of rubbish. We couldn't work it out. Right, that'll do. I have no idea how this bloody stuff works. It's too bloody complicated for me. Right. I'm gonna go. This isn't the way to do a show, is it? Right. I'm all disheveled. I don't know where I'm coming, going, left or right, in and out. I've got people phoning in, trying to have a fight, can't have a fight. It's all confusing. I don't know what's going on. Right, I'm gonna go. So that's it. So what I was saying was, yes, by midnight tonight or thereabouts, here is the link for that. If you want to find out about Get to the Chopper, if you want to know what that's all about, we had a special event today, members only, right? If you're not a member, you can't see it, basically. Part 1, Part 2. Here's Part 1. It's on the homepage of the channel in the members only videos. If you're not a member, you won't see it. So that's, you're not supposed to. If I give, it's secret. If I give you the link, right, that link won't work if you're not a member. So, think on. Just saying, think on. Make sure you think on. That's it. See you later, folks. See you back in the morning. The Get to the Chopper deal ends when we get to the music concert tomorrow night. But that's it. I'm done. I'm out of here. This has been ridiculous. It's gone on way too long. Way too long. People have left. That's how long it's gone on, right? That's it from me. I'm going to send you to the extra channel because I've got nothing better to do. And I'm tired and I'm bored now. So I might as well just be honest and tell you that, That's how I feel. I'm just telling you how it is. There's nothing like insulting your audience. I'm bored. I want to go. I want to go and have a cup of tea and a biscuit. All right. See you in the morning. See you on the Extra Channel and have a lovely evening. Ta-ra.